About Tesla, how are you?
Pretty good. How are you?
Good.
How
How's your weekend going?
Busy. A lot of stuff to do at home, but overall, so good so far. Uh, so
Thanks for hopping in on short notice.
yeah, I saw you started the space, and unlike business days, I do have time right now to stop by.
That's awesome.
Not much time to do it during business hours, unfortunately. But
Yeah, that's fine. So this is episode 221. We're going to review later on. Let's kind of review some of the software updates and maybe a couple other things. And then we're going to review James Katz's forecast for 2025. He put out a detailed thread that includes a detailed forecast for Tesla for next year. We're going to go through that line by line. I actually haven't read it, but I know he does good work. So looks like, hold on one second. We have an audio issue on YouTube. All right. How is it now? Pharaoh 92. How is the audio? Okay. About Tesla, let's start with software updates.
all right, so there is a split now. There are three separate tracks. One track, the most recent software is going to hardware 4 only. Then there are some updates going for hardware 3, and then there is a separate track for the Cybertruck. So the latest update, the one that has the end-to-end on the highway, version V12.5.6.3, just started rolling out yesterday. So it first went to the early access group, and as of this morning, it's going to a wider group of users. Still a relatively small portion of the fleet, less than half, around 0.5% of the fleet in the US and Canada. But it's way beyond the initial early access group. So we're talking thousands of cars now. It's bigger than the previous rollout of 6.2, which didn't get to that wide audience. And the biggest of that latest .6 branch is actually version 12.5.6.1, which went to about 3%. So between those three subversions, the total penetration of this is a little bit more than 3% of the fleet. Majority of the fleet is still on the .4 branch, .4.1 or .4.2, including all hardware 3 cars. So hardware 3 cars are being updated to that .4.2 pretty actively. So it's about 40% of the fleet is on that branch, more predominantly hardware 3 cars, but some hardware 4 as well. It's not exclusive to hardware 3. And then also 4.1, the remainder of the fleet, majority remains on that version. So that's where we stand. It looks like this latest update will go wide. It's been slow rolling over the past couple of weeks, but hopefully it will now go wide. And there are no signs of the version 13 yet, except for some rumors that maybe some employees are already testing it, but it's hard to tell how many employees are actually involved in that early round.
Okay, great. Thank you. So you said, to summarize, FSD 12.4 variants are 40% of the eligible fleet. This is the largest software that's out there in public. And
12.5.4.
Okay, 12.5.4. And then we also have 12.5.6 variants going out slowly, and it's about 3% of it, right?
Correct.
Okay. What's the difference between 12.5.4 and 12.5.6? And also, I've seen a number of posts now talking about that some of these latest versions are a bit of a step back. Did you hear the same? And why is that, you think?
Well, the biggest difference between 5.6 versus 5.4 is the end-to-end model on the highway. So they finally made that switch for that. So this is probably the biggest change. And in my personal experience, I have 6.1, 5.6.1. It's a pretty good improvement on the highway. I had um, pretty good rides recently. Like on Friday, I had 2 rides, an hour or more in total, and it's was no intervention. I didn't have to touch the wheel, didn't have to touch the pedals. I do experience occasional problems on the city streets, and I don't know why they have this. Looks like a small regression. Like the biggest one would still be sometimes it would take the wrong lane and then would correct later on. Usually I don't have to intervene, but it's kind of strange that it would pick the wrong lane and then would have to correct. There are also some cases which I did experience in this version with some hesitation at the lights, like green lights or red lights. Or yellow lights. So for example, like let's say I come to the intersection and it turns to yellow and it's sort of trying to decide whether to proceed or whether to stop. So I see some hesitation. I didn't have any dangerous situations personally, but that hesitation is kind of strange. And then I don't think I had this in the previous version. So those are the only regressions that I personally noticed. There are still some old issues remain, like occasional problems with the yellow lights and everything. But the biggest improvement is actually to me is that the speed control, the way the speed is now controlled, they changed the way it is now handled. So there are speed profiles on the highway, and from what I've heard in the latest version, they reduced the speed limit to like even on some city streets at the higher speed, you can still use the speed profiles, which is good. You can also set the offset as a percentage, and you have manual control of the speed. So that gives much more flexibility as far as controlling the speed as you go. Those are the main differences.
Thank you about Tesla. That's great. Okay, so you have seen a bit of a regression in traffic lights with the latest version, but otherwise it's really good. And you especially like the speed profiles that Tesla introduced with these newer version. But we don't know exactly why the regression happened. We don't have an idea of that. By the way, there are some people on X reporting some audio issues. Like, for example, DA Thor says, sorry, Arthur Blake says, audio on X was cutting out constantly, so I switched to YouTube. So if your X audio is cutting out, you can use the link at the top of your screens to switch to YouTube. And I highly recommend listening to this episode on YouTube, because later on we're going to review the James Katz forecast for 2025, and it's going to be on their screens if you watch it on YouTube. Okay. About Tesla, do we know exactly why that regression, or any theories about it?
No, not really. It is possible that they had to retrain the whole model since they went with end to end on the highway. So I don't know if that affected the model on the city streets as well. So perhaps they retrained it, and and when you do training, you sometimes can get some regressions. Also, I don't know if that has been already addressed. I don't have the most recent version, so it is possible that those regressions have been addressed. I have the 5.6.1, which was released in October.
Okay, great. Thank you. And everybody wants to know about V13. FSD version 13 was supposed to start rolling out in September, but for some reason it hasn't yet. Any thoughts on that?
Well, the 13 is the biggest version. I mean, whatever the goal they set, they will release it when it's ready. So it's not something that they can promise or guarantee by a certain date. It's a huge step up. It's a much bigger model, so it will require some training. So I'm not surprised it's taking longer. But they also, I want to point out that they didn't promise the wide release last month. They said it will just start internal release to internal customers, which is employees basically. So they may have already released it to some of the employees last month. I don't know, but I think it's coming. It's just we just need to be patient, and it will happen as soon as it's ready.
Okay, so maybe Tesla has released it to some employees, but we don't know that for a fact. Sometimes there would be. By the way, I took an action. Just kind of restarted the space on my end on X. So let me know if X audio has improved. If it hasn't, if it's still cutting off, go to YouTube through the link at the top of our screens. A number of people on YouTube say the audio on YouTube is perfect, and that's because of Paymore. Because Paymore gave me this laptop, MacBook Pro, that is able to handle several tasks at once. So I don't have to worry about closing tabs. I don't have to worry about putting ice on my laptop. And thank you, Paymore, for making this space possible. Yeah, I guess we'll wait and see. But it's November now. It was supposed to go out in September, and at the time we said maybe it's going to start going out to a couple of people, but the wide release probably isn't going to happen until spring. And by wide release, in my book, wide release means majority of the eligible fleet. So right now, for example, About Tesla says more than 40% of the eligible fleet has 12.5.4 variants. So in my mind, that's the one in wide release right now. Okay, cool.
So actually, between those two, it's closer to 80%. So like majority of the fleet has that either 5.4.1 or 5.4.2. So those are the predominant branches.
Okay, perfect. So majority combined, 12.5.4 plus 12.5.4.
4.1 plus 4.2.
Gotcha. And 4.2 is for hardware 3, right?
It's not exclusively for hardware 3. It's mostly going to hardware 3, but there are quite a few cars with hardware 4 on that version as well.
Have you seen any performance variance between FSD on hardware 4, hardware 3? I mean, when it first came out, there was a bit, but have those differences persisted, or is the user experience about the same?
Well, I have a hardware 3 car. My wife's drives one, and I can probably say it's a little bit less. There is some noticeable difference, but it's I don't know if it's because it's hardware 3 or because it's an older version. It's 5.4.1 right now, I believe. So it's not a clear comparison.
Okay, thank you. About Tesla. Hustletown, how are you?
It's a beautiful Sunday morning. When I logged in on X, it was a little choppy, but when you brought me up to the speak board, it cleared up. It's weird. But everything sounds great on YouTube.
It happens. Exactly. All right. I was going to say you can join me as a speaker if you want through StreamYard, but that's fine. Either way is fine.
Well, I don't know exactly how much time I actually have. It's a Sunday. This is baby girl's day, but while she's sleeping, I'm here.
Okay, cool. Yeah, people are saying X is still cutting in and out. Steven Yamada says this episode is second on YouTube search result for Tesla Live. That's funny. Okay. All right, it says still bad for X on. All right, you know what I'm gonna do? I'm gonna restart the X space. If you're on YouTube, you won't be affected as I do this. Just bear with me for 1 minute. We're going to restart the space on X. Sometimes X just the bugs are fucking killing me. All right, we'll be back. All right, if you're watching this on YouTube, just bear with me for a second while I restart the X space. Can you guys hear me on YouTube right now? All right, perfect. True to it. Hustle Town says we can hear you. Great. All right, perfect. So let me just get this going real quick. All right. Careful that bear don't bite. You need to get you a Tesla hat. I do have a Tesla hat somewhere. Okay, good. Hustle Town says it's fixed. Perfect. Let's get started. All right. Can everyone hear me? On X, on YouTube, Hustle Town says the X issue has been fixed. I'll pin on X if you want to watch it on YouTube as well. I highly recommend watching this episode on YouTube because we're going to go through some screens together, and hit that like button. Okay, good. Let me pull up this forecast by James Catt. Okay, now you can see it on YouTube. So we're going to go through this thread that he put together. And man, maybe it would be easier to do this on StreamYard. But can everyone see it? I'm going to move this down. Okay, now, this is probably good enough. So let's read through this. Oh, Nick is here too. Great. Nick, come on to speaker board. If anybody wants to kind of chat through these assumptions, come to the speaker board, request to speak. And I highly recommend watching on YouTube as we go through the screens. So James Catt says, January 2025 forecast thread. This thread will cover the entirety of my 2025 Tesla forecast. I will cover all the individual elements that contribute to each of the Tesla's businesses. This announcement was originally shared with my subscribers October 27. First, let's take a look at my key findings from the model, and I'm going to be taking notes as well. Each estimated average probability to occurrence. So he has a bear case, a base case, a bear case, a bull case, an uber bull case, and he assigns probabilities. Base case about 40%, bear case 30, bull case 29.5, and then uber bull case 0.5% probability. I actually I don't really like the whole scenario analysis stuff. I know it's a common practice, in the industry, and I think it's kind of a cop out kind of thing, but I think there should be one forecast, and it should be as possible. You should try to get it to as possible as future as as you can. But let's go through these, and then maybe we can decide which one is most likely to come out. Okay, so maybe that can be the objective here as we talk through assumptions. This should take about 2 hours. So settle back and like and repost the space, because most people don't know that we hold spaces on weekends sometimes. So please take a moment to like and repost, just like True to a T just did. Like and repost the space. Tell your followers to join. Send the space on YouTube to your friends, family. Each of these scenarios leads to a unique EPS calculation. The weighted average of each scenario is what is used to provide a 2025 forecast of $3.99 per share in adjusted earnings. This compares to the estimated 2024 EPS target of $2.49, estimated 2025 EPS target of $3.25. Both from consensus; those are consensus numbers. So his forecast of $3.99 per share is 75 cents above. So that's about 20% above the consensus of the next year's EPS target. Okay. Any questions so far, Hustletown? Are you able to see this on YouTube? Okay, that's a thumbs up.
Your camera on YouTube is kind of blocking some of the information, but other than that, it's okay.
Okay. Yeah, that's not a word. How about, is this better?
100% better right there. I like that.
It's 100% better? Wow. That's a lot of percent. I mean, I can do a new layout. Oops. Never mind. I'll do that offline somehow. Edit layout. Do you see that right now? Do you see it on the screen? Something changed? You do? All right.
Yeah, with the speaker board, it's a little early, but just give it a few seconds. It happens on YouTube.
Okay. That's okay. All right. So if this is 100% better, I guess we can just hold on to this. What if I do that? Oh, this is even better, right? Look at that. And I can even do this now. How about that? Is this much better? Yeah.
Yeah, it's definitely giving you more space.
Thank you. Okay. Cool. Cells shaded in yellow are inputs, while cells shaded in white are results from calculations formulas which derive from one of the other inputs. Okay. So he has this bear case. Can you see my my mouse as well as I kind of point my pointer?
Oh yeah, your mouse is doing wonderful.
Okay. All right. Bear case 40%. Sorry, base case 40%, bear case 30%, bull case 29.5, uber bull 0.5%. Vehicle delivery. So base case vehicle deliveries 2.1 million vehicles, up from about 1.8 this year. And bear case, he has 1.985. So like this is very similar to, and it just doesn't make sense to have a bear case that's 10% growth, I think. Like what if, for example, there's a recession next year and all automakers see their deliveries decline? So I think this is an aggressive bear case, which is kind of the thing that Kathy Wood does sometimes. Like she labels a bear case as kind of insanely high growth. So even this bear case would be pretty amazing on a recession if there's a recession next year. So for those of you who just joined, I highly recommend watching this episode on YouTube, because I'm showing things on the screen. You can reach the YouTube channel through the link at the top of our screens. And please hit the like button and subscribe to help us grow. We're going through James Katz's forecast. Bull case 2.26 million. So that would be about, so from 1.8 to 2.26, we're looking at 450. I guess we're looking at like a 25% growth. Yeah. So the bear case, bull case is very, very kind of close to each other, which is interesting. 26 divided by 1.8. Yeah, 26% growth. All right, so 10% growth for the bear case, 26% growth for the bull case. And then there's the Uber bull case, which is similar to the bull case deliveries. Okay, so I'm guessing maybe the Uber bull case has some FSD, as you can see here. Okay, so generally speaking, the base case is looking at, on the delivery front, we're looking at a 16.6% growth. And then bear case is 10% growth, bull case is 26% growth. And then the Uber bull case has some wide adoption of FSD revenue. FSD take rates increases. That's the Uber bull case for next year. Okay. We'll go to that, see what the take rate assumption there is. Okay, all right, so I have some criticisms here. So first criticism is, why is your bear case still showing growth? That doesn't make any sense. Base case should be probably like a 0% growth, or even maybe some downside in case of a recession. And then second criticism right here is, you can see here FSD gross profit is 100%. That's obviously incorrect. And even regulatory credit gross profit, I don't think it's 100%. There's some administrative stuff associated with that. And FSD, as we discussed in the Rivian watch party, earnings watch party, there is cost associated with sending the software, maintaining the software, maintaining across different fleets and everything. So these assumptions are just unreasonably high. So FSD gross profit, 100%. Yeah, he's got the, so these are vehicle gross profit. Okay, so let me just go back to here real quick. Oh, shoot. Okay, there we go. So he's got vehicle revenues. So I guess we'll have some ASP assumptions later on. Regulatory credits, 2.8, 2.8, 2.8. Okay. It looks like he kind of assumed the Q3 run rate and multiplied it by that. I think in the bull case and Uber bull case, we can probably assume some more regulatory credits. Regulatory credits have Wolf says, never trust a cat. They're too sneaky. All right. Wolf also says, his bull and Uber bull case are too similar. I agree. Okay, great. All right. Solar storage, very similar. I think that's also unreasonable. I think the bull case should probably have some sort of aggressive assumptions for storage deployment, and then the bear case should assume something like regulatory hurdles, interconnection issues to lower the storage revenue here. Yeah, we can do better than this on Tesla Live. Okay, gross profit, vehicle 17.1, in the bear case 12.2. Okay, and then the bull case 18.4, Uber bull 18.4, regulatory case 100%. We talked about the margin assumptions for the others. I think the margins can improve above 30% for Tesla Energy. You know, we'll on the Uber bull case maybe. Looks like the Uber bull case, the only difference in Uber bull case is the FSD take rate assumption so far. And then some services, which is kind of immaterial. All right, gross profits, 14.4 billion for base case. So those are just kind of calculations. Okay. Total gross profit. Okay. Operating expenses. You know, the one thing I want to highlight first is, before we move on, Omar said in one of the episodes that he expects automotive gross margin to improve above, like back to 30%, an all-time high that Tesla has had. And James Cat, even in the Uber bull case where he's assuming a big jump in FSD take rate, shows only 18% for vehicle gross margin. So I think closer to where James Cat is on the gross margin assumptions, as opposed to Omar's. And I looking forward to a coffee bet if we can agree on the wording with Omar. But operating expenses, SG&A. So operating expense. So the expense assumptions are the same for. This makes no sense. The expense assumptions should be different for the different cases. Like you're not going to achieve. So if you kind of like like SG&A is going to be different, R&D is going to be different. There's some bonuses associated with these targets. I'm guessing vehicle deliveries can impact operating. Like it's not like vehicle deliveries have no impact on operating expenses. So that doesn't make much sense either. For those of you who just joined, I highly recommend watching this on YouTube. We're going through James Katz's forecast for 2025. Any questions, comments, any questions about specific cells? Request to speak on X or leave it in live chat on YouTube. I'll check it every now and then. Okay. Marty says, is he including regulated credits from the energy products like mega caps? And then Hustletown said doubtful. Yeah, I'm not sure, Marty. I don't know. Maybe he'll mention later on. Okay. Let's continue. So operating expense, so that's the third criticism. So the first criticism, bear case has too much growth. It's like, and then FST gross profit is 100%. The second criticism, and the third criticism is, or third feedback, I guess. OPEX should vary between cases, among cases. 4, operating income, these are just calculations. Other income, okay, that's 1 billion, fine. Tax rate, 21%. The CFO has said the tax rate in the longer term would be about 25%, if I remember correctly, a couple of quarters ago on an earnings call. So that's something we should look into too. Okay. Diluted shares outstanding. Yeah, I think that's probably fair. I don't expect a share buyback program anytime soon, just because Tesla will have to spend billions of dollars in AI compute anyway. That's probably the highest and best use of excess cash to just improve training compute. And then just calculate the EPS. But he says, James Katz says, overall, we can, by the way, do we know his name? Hustletown? Does anyone know James Katz's name? No, anonymous, right? Okay. So I'll just call him Cat, or is it just James? I don't know. Anyway, overall, we can see that I think Tesla has a higher probability of overachieving in 2025 versus market expectations. Key assumptions driving this: surging energy volume and sales at a healthy gross margin, expansion of operating leverage as revenue growth outpaces growth in operating expenses, stabilizing automotive gross margin due to 1, Model Y refresh spurring organic demand and limiting need for future price cuts above and beyond what we see in Q4 2024. Okay. Interest, so I guess he's assuming what we're seeing in Q4 will carry throughout 2025, but Q4 is the seasonally weak quarter, and if interest rates come down, I wouldn't expect these massive cuts to continue. I mean, Tesla's offering record amount of incentives right now to buy a new Tesla, so maybe we can in 2025 kind of ease up on the incentives a little bit. Two, interest rates declining globally, which will help Tesla reduce its financing costs to maintain aggressive vehicle financing rates. Okay, there you go. So he has that assumption a little bit. Cost per vehicle decline mostly driven by much better factory utilization, especially in Austin and Berlin. Still high regulatory credit sales. Okay. I think credit sales will probably increase throughout 2025. I will first cover my assumptions for energy since energy volume sales remain the same in all scenarios. All right, second tweet, energy. Powerwall. I use 260,000 for sales in 2025 because Tesla is currently installing Powerwall at a rate of 260,000 per year, company post. This means sales probably exceed 260,000 per year since Powerwall is sold to third parties that carry a small inventory. 260,000 therefore conservative because it doesn't account for the inventory and assumes no growth in sales rate when Tesla has consistently shown growth in sales over the years. Yeah. I think for the base case, it's probably safe to assume Powerwall. We have seen no indication of saturation for Powerwall demand. So I think Powerwall sales growth rate will probably continue. Let's see if there's any questions on YouTube. Marty says, I would add the falling price of batteries to that list. I agree. We also mentioned the Rivian watch party, Rivian earnings call watch party that Rivian mentioned. There's still some benefit to recognize when it comes to raw material cost. And I think that's probably applicable to Tesla as well. Yeah, Nordic says his name is James. So James. I like the cat. Okay. $9,300 is what Tesla currently sells Powerwall for. This yields 3.51 gigawatt hours of storage and $2.4 billion of sales for the year for 2025. Megapack. Lathrop hit maximum production capacity in Q3 and is now building close to 10,000 megapacks per year. But while Tesla may be building 10,000 per year, I'm assuming they will only fully recognize the sale of 8,500 megapacks in 2025 to account for the fact that revenue is recognized in stages. And they probably won't reach a perfect steady state where production equals sales because there's a lag time between sale and revenue. Also assume a further 10% decrease in megapack price on average for 2025. I think that's reasonable. Shanghai is expected to begin operation in Q1, and the factory's targets and production rate of 5,000 a year to start. China is exceptional at ramping production, and they may even exceed this. However, I'm assuming, probably conservatively, that over the course of 2025, they will sell only 4,000 megapacks. Okay, and the pricing will probably be lower in China. At 3.9 megawatt hours per megapack, Tesla is projected to install 48.8 gigawatt hours of megapack for $12.7 billion in 2025. Okay. Where my engine forecast differs between scenarios, among scenarios, the margin assumption, my gross margin assumption follows. Bear case 27.5, bear base 27.5, bear 23, bull 30%, uber bull 30%. Okay. Given the excess battery supply in China, the falling battery component costs, the expanded factory utilization in Lathrop, and the high ongoing demand for battery storage globally, I think we should expect energy margin to stay high. My base case may even be conservative given that gross margin exceeded 30% Q3. And I wouldn't be shocked to see it increasing further. Okay, good. I agree with all of those. Any comments, Hustletown?
No, everything seems pretty good right there.
Sorry, say it again.
Everything looked pretty good right there.
Okay, cool. Any comments from YouTube? Wolf says, Nicholas, and when I read comments on YouTube, I'll post them on the screen as well. Nicholas on X posted China's energy plan expected to be complete next month, so December. Okay. Solar sales are irrelevant to the analysis because they're small and they assume gross margins either 0 or low single digits. I agree. Okay, so I think on Tesla Energy, we're probably on the same page. He just wants, I mean, the one thing we mentioned was the gross margin, I think, could be higher. And he does says there's a narrative as well. He wants to be conservative gross margin for energy. And I think Powerwall sales growth rate could increase. All right, 3, services another. This is just a small section here. Let's cover the assumption of service other. Here too, the revenue assumption is the same, but the margins have changed by scenario. If you look at service and other segment by quarter, you'll notice fairly linear growth every quarter. This makes sense when we consider which revenue items go into segments: supercharging, services, service sales, used car sales, merchandise, etc. As Tesla continues to grow its vehicle fleet, the fleet will steadily require more service. Lease returns and follow-up sales are also growing consistently because Tesla's supply of lease returns is growing consistently. So overall, I think this line will grow steadily every quarter in 2025, and we should land somewhere between near 13.6 for the year. And then some margin assumptions, but the range of margins is pretty tight, so I think that's okay. The one thing I think to keep in mind here is the one thing I would add to this, just kind of overall notes in the industry. There was a surge of leases, EV leases in 2023 and 2024, because if a vehicle didn't qualify for the $7,500 credit, legacy automakers went around that by offering leases. And in Rivian, for example, 46% of their deliveries are leases. So there was an unusual amount of EV leases in the last 2 years. Those leases will come back in 2026. And yeah, so 2026 is going to be a year where we see tremendous pressure, or we might see tremendous pressure on EV resale values because of that reason. So that's one thing to keep in mind, because that plays into services margin, resale values of Teslas, etc. So it's just something to kind of be mindful of in the coming quarters. Last quarter's print was 8.8, so my 8% is not only realistic, but it's probably conservative. Okay, fine. Regulatory credit sales assumption for 2025 is an average of $700 million per quarter. Recall that in the last 2 quarters, Tesla regulatory credit sales were $890 million in Q2, $739 million in Q3, respectively. I think $700 million per quarter is very reasonable, and considering the legacy order appears to not be following through on their EV plans and/or are cutting back, this will only mean more credit sales for Tesla. There's risk in this number, however, if President Trump waters down the EPA emission limits. However, the bulk of that risk would probably only be materialized in 2026 plus. I don't know why that he's assuming that, why it would be after 2026, but I guess this TBD. Hustleton, any idea why the cat might be saying that last sentence? If President Trump waters down the EPA emission limits, the bulk of that risk would probably only be materialized after 2026 or later.
My guess would be that the regulatory credits, I really don't know. It's all TBD, like you said, but there's regulatory credits, Europe. I guess maybe that's a factor, but no, I don't understand it. I don't know what's going to happen on January, but it could impact it as soon as Q3 of 2025, in my opinion.
Yeah. I mean, I think this $7,500 credit is probably going away soon. I think that's high probability. But I don't think it's going to impact Tesla that much, because I don't think most people are even using the credit. Like Rivian earnings call. I mean, I highly recommend people watch the Rivian earnings call watch party. That was very useful. We got some takeaways, both on the cost and revenue fronts. And Rivian said most of their buyers don't even qualify for the credit because of the price. So I think that's also true for Tesla to some extent because of income limits and just kind of like general awareness of EV tax credits. So I don't think it's going to be a huge deal for Tesla. I think it's a bigger problem for legacy automakers who are literally relying on these EV tax credits and IRA credits to even get close to profitability on their EVs, and that didn't happen. So anyway, let's take a moment to like, subscribe, and share on YouTube. If you're enjoying this, we're going to continue for another hour or so. We're going through James Catt's forecast. We're providing our comments, and we're also going to build a DCF for Tesla Live on YouTube. So take a moment to like, subscribe, and on X, like and share, repost, so that people come into the space and we can grow Tesla Live. And a quick word for our sponsors while you do that. Tesla Live is proudly sponsored by Paymore, your trusted destination for buying, selling, trading, and recycling electronics. At Paymore, you can buy your latest gadgets at great prices, sell or trade your used electronics for cash or store credit, or recycle old and broken devices responsibly, helping reduce e-waste. And Tesla Live is proudly sponsored by Joa, your go-to source for premium Tesla accessories. At Joa, you'll find innovative charging solutions, stylish interior upgrades, and cutting-edge tech add-ons. You can use promo code TSLA Live at checkout for a special discount. Thank you, Paymore and Joa, for sponsoring Tesla Live. Let me just look through a few notifications I just got. Yeah, so I'm not actually seeing live the comments on X. I'm keeping an eye on YouTube live chat more. So that's an easier way to kind of provide your feedback. Thank you to those of you who reposted the space. Marty T, No Clue, Bobby, GT, and Steven Yamada. Let's see. Thank you, John Galvin, for reposting as well. And Christoph. And Hustletown. That's great. Thank you. And Gabrielle. Bull 2035 says Trump will likely bank easy wins first, and this is probably not an easy win, as both Democrats and Republicans have constituents happy with these credits. It is hard to take away credit or tax credit for working folks. Okay. Bull 25 for that sentence by James Catt. That sentence right there on the screens right now. There's a risk in this number. However, if President Trump waters down EPA emission limits, the bulk of that risk would probably only materialize in 2026 plus. Yeah, I don't know if that assumption is safe. Like Bull 2035 said, because it will take months, if not a couple of years. I mean, it can take months, I agree, but it can be done in months. It doesn't have to take a couple of years, especially if they're controlled. And he's been kind of running on this platform. And I don't know if he needs congressional approval to change this. Hustletown, any idea? Actually, can Bull come up? Bull 2035 come up to speaker board if he's still here? Does Trump need congressional approval to remove these credits? New Face says, I have a friend who works on Powerwall production line at Giga Nevada. He says they're currently working on doubling production. Okay, good. Yeah, let me know if you think in YouTube live chat and on X, let me know if you think these EV tax credits and the IRA production credits are going to go away. And if so, what's the likely timeline here? What is necessary from a congressional approval perspective? Hustletown, any idea on that?
If I had to guess, he can't just X the IRA, the $7,500, but the EPA for sure. I think he has carte blanche on what he can do with that. So, guess we'll just find out in January.
So he can actually act faster on EPA credits?
That's my understanding. I think he can really just go in there and fiddle with it at his leisure. But with the passing of the IRA through both houses, and I think he's going to have to be cordial. I don't know. Did they get all the house? Is the house red as well?
I think that's still TBD, but I mean that's the last I heard yesterday. So I think those counts are still going on. I mean, California is still counting. Isn't that crazy?
In this day and age, yeah, it's kind of ridiculous.
Yeah, it really is. They're like 70% of the count or something, which is like it's been almost like 3-4 days. Like, what are you doing? Some states had it like within a few hours. I mean, within the first day, definitely 99%. That's crazy. Like, why are they so slow at everything? You know. Brandon LaBianco asks, I'll pin this at the top on your screens on YouTube. Can Trump remove hybrids from the credit? I think he can label them as gas cars instead of EVs. Well, the problem is right now, I think not many hybrids qualify for the credit anyway. I think that's a bit kind of overblown. And these are mostly plug-in hybrids. And if you look at the number of cars, the number of people who bought a hybrid and use the EV credit, it's probably super immaterial. So I wouldn't focus on that too much. I think it's more rhetoric than reality. Pharaoh92 says ZEV credits are regulated at the state level. That's a really good point. So these are, I think the federal, I think Trump can influence. I think Trump can change that. Like, I think Trump can make it so that the states cannot do ZEV credits. I think, but I'm not sure. This is something we should discuss in Tesla Live this week. Can Trump remove emission regulations at the state level? At states. Yeah, I think there was some efforts around kind of taking away that California's power to do that in recent years. Anyway, something to keep an eye on. Thank you, Pharaoh92, for the 2 CHF. I think that's franc. Swiss franc tip. Appreciate that. We're getting tips from different countries. It's pretty cool. All right, let's continue. Regulatory credit sales carry no cost to Tesla and are therefore recognized at 100% gross margin. I don't think it's no cost, but I think it's pretty close to 100%. Also, the other thing we learned from Rivian's call earnings watch party was that they're very lumpy, and it depends somewhat on states' administrative process, like when they're recognized. So, yeah, that's part of the reason why it's lumpy. I'm glad we did that watch party. And Hustletown, thank you very much for joining that watch party.
I do what I can. I mean, I'm a layman at best, but I appreciate you for educating me during that. I recommend everybody give that thing a watch. Just compare it. Even if you were to go back to look at Tesla in 2020, let's say 2019 or so, and compare the two companies at those stages, it's quite riveting.
Yeah. I highly recommend watching the Rivian Q3 earnings watch party. You can find it on the YouTube channel under the live tab. You can watch the recording. There's quite a few takeaways that relate to Tesla. And you can reach the YouTube channel through the link at the top of your screens. Wes Wallen just joined YouTube live chat. Code check 95. Thank you, Wes. Wes Wallen says, looking for V13 and possible feature complete drive videos. We also discussed about Tesla. For those of you who just joined, About Tesla was here in the space early on, and he gave us a overview of where the software updates stand. And around 12.5.4, 12.5.6. We took about 10 minutes to discuss that, and also some thoughts on V13 as well. So you can, if you're watching this on YouTube, you're able to rewind during the live stream, even during the live stream, and watch that segment again, and go back 2x speed, come back, catch up to us, etc. Skip the parts you don't want, listen to the parts, you replay the parts you want, etc. And Steve is here as well. All right, this is really good turnout on a very short notice. I love it, especially on YouTube. Okay, let's continue. Automotive sales. So this is the 5th tweet in the thread of forecast for 2025 from James Katz. Okay, we're going to dig into automotive sales a little bit more. The biggest component of automotive is obviously vehicle volume sales. So let's start there. Elon's guidance on Q3. Okay. Elon's guidance on Q3 2024 call was for 20 to 30% growth in 2024. Okay, so that's a mistake. That should be 2025. 20 to 30% growth in 25 over a 1.8 million vehicle number. Okay. 20% growth over 1.8 is 2.16. 30% is 2.34. My scenarios assume the following delivery numbers. Base case 2.1, bear case 1985. So earlier we said bear case should at the maximum assume 1.8 million, 0% growth. Let's say for like a recession purposes. And then the bull case 2.26, uber bull case 2.26. And I understand Elon gave that kind of guidance, 20 to 30%, but the fact is that guidance was 50% per year as late as recently as like 1-2 years ago. So guidance changes like any management guidance. None of this is kind of set in stone. Nobody knows the future. There might be a recession next year. We don't know. At a minimum, the interest rates appear set to stay higher for longer. Like we also had a watch party on YouTube for the Fed press conference, and there we noted that Jay Powell opened the door for a pause in the next meeting. Whether it's going to happen or not, I don't know. I don't think they know either at this point. But if you look at CME Fed Watch tool, the market started pricing in a pause for the December meeting. The current probability of a pause in the December meeting is 35%. So there's 1 in 3 chance of a pause in December. And at that point, we don't know if they're going to cut again or when. So that all obviously plays into the auto loan rates. I don't think anyone expected auto loan rates to stay this high for now. Like, an average new car loan rate is still about 10%. Used car loan is still about 14%. If you look at Elon's tweets from like a year, 2 years ago, as mine, I had expected deflation, and Elon expected deflation. That obviously hasn't happened just yet. Even car prices haven't really declined that much on the industry-wide level. So these loan rates are the kind of the Achilles heel for automotive sales. So we don't know what's going to happen next year. So I would have, like, if I was doing this, I would expand the bear case versus bull case range a bit higher. Especially on the bear case side. He says, I would prefer to take a conservative approach on volume since I think a lot of it will depend greatly on how well Tesla executes in bringing new models to market and their track record for bringing new vehicles and or refreshes for existing vehicles to market suggests that they're often late. Also, I would rather be conservative in my assumptions and be surprised to the upside. That said, since this is Tesla's biggest revenue segment, this is part of my forecast model with the most diversity. The base case, bear case, and bull case each have different assumptions of model mix, volume, price, and cost. Let's cover the base case scenario first. Okay. We have a couple of comments from YouTube Live Chat. Wes Wallen says, my quick takeaway from the Rivian call. So maybe he listened to it or watched the watch party. Wes says, R2 does not seem designed for a higher run rate and that is a problem. R1T and S were designed for max 50,000 per year. This means that R2 will be very difficult to get a profit positive. My positive feedback is that R3 shares many parts with R2, so if Rivian can max out R2 production, they might have a chance to get a higher production rate and max out their R3 line. However, the timing against the Tesla Rotaxi is very daunting, so I'd expect that those headwinds will be too much to overcome. Yeah, I think Cybertruck delivery starting at $80,000 is going to also pressure their R1T, R1S sales, and the new Model Y will probably pressure R1S sales a bit more too. And there are many more takeaways from the earnings call. Like, for example, the one key takeaway from Rivian earnings call that we discussed in the watch party was their forecast for gross margin in 2025, their comments for gross margin next year. I'm not going to repeat it here because I highly recommend people watch it. The Rivian earnings call watch party is very important for Tesla investors as well. Okay. Marty, I think a Rivian vehicle will license Tesla software and enact. No, I don't think so. Yeah, okay, moving on. Base case. Model S X3Y ASP will be stable with Q4 2024, which I expect will decline sequentially from Q3. I think higher demand for Model Y refresh and ongoing interest rate cuts from central banks will allow Tesla to maintain ASP with Q4 levels. I think that's an optimistic assumption, to be honest with you. I think that's an optimistic assumption. And I think as long as companies like Rivian and Lucid and hundreds of companies in China are able to flood the market below cost at prices below cost of producing vehicles, I don't think Tesla has a much wiggle room in setting prices for EVs at higher levels in the near term. I think Tesla's opportunity is more around FSD take rate in 2025. And energy. But hardware vehicle is just Tesla's a price taker right now on that front. Cybertruck ASP to decline to 70,000, but volume grows to. And how is that going to happen? I don't think that's going to happen in 2025. But volume grows to 120,000 deliveries on the year. Tesla Semi sells 5,000 units and an ASP of 250,000 a truck. A new Class 8 diesel truck costs between. I don't think that's going to happen either. I think these are too optimistic. Let's the customer keep the 40,000 IRA credit. Yeah, let's kind of discuss whether IRA credits will remain or not under Trump in Tesla Live next week. I've assumed that cheaper models, of which I expect there to be several, launch at the beginning of July 2025. Since they are cheaper, I assume ASP of these vehicles would be $4,000 to $5,000 cheaper than the ASP of Model 3 today. So starting at $35,000 in US, 34 in Europe, and 30K in China, I'm also forecasting that Tesla will build these models in Austin, Shanghai, and Berlin, and that Shanghai production sales will outpace the other two. Okay. On overall deliveries, I do expect some cannibalization of current versions of 3 and Y from the cheaper models. And all of the volume growth in 2025 comes from the launch of these vehicles and Cybertruck. Okay. Given these changes, I forecast a 4% decline in ASP versus Q3 levels on a full year basis. However, given that Tesla's existing factories are going to be much more productive and that cheaper models should cost Tesla less to build, I also expect significant cost reductions in 2025. My base case assumes a 4% decline here as well. When combining both, I see 25 auto margin, excluding credits, land exactly at 17.1, which is in line with the latest Q3 print. Okay. And he has volume ASP assumptions by model. You can see this on YouTube on your screens. Thank you, Cindy, for the 107th like on YouTube from Australia. Steve says, and Emmanuel for 106. Steve says, Rivian with FSD is something only Tesla owners want. In his opinion, there aren't a ton of non-Tesla, non-Rivian customers holding out ordering because Rivian doesn't have FSD. I agree. Rivian is gone at this point. Yeah. If you watch the earnings call watch party, you'll agree with me. All right, volume 13,500 for Model S, Model X 23,500, Model Y 26,000. So ASPs, Model X 81, Model S 77. I think the Model X volume assumption is pretty aggressive. I think S and X are gone, unfortunately. I think S and X, I think they're very great vehicles, but for whatever reason, people don't buy them. I think the Lucid Air is eating into some Model S demand. The R1S is eating into Model X demand, and the Model Y is eating into Model X demand. And I don't think any of those are going to change in the coming quarters. As long as Rivian and Lucid are able to sell vehicles at prices below cost, as long as that continues, SNX, I think, don't really have any sort of material impact on the top line or the bottom line. Okay, Model 3 ASP $40,000, Model Y ASP $41,000. But where's the new vehicles that he's talking about? Where's the Cybertruck? Oh, that's Fremont, Austin. There we go. Model Y 41, Cybertruck 70. I think that Cybertruck ASP is too low. And then cheaper models, $35,000 ASP. Okay, interesting. Berlin, Model Y 40, cheaper models 34. Okay. Shanghai, 35, Model 3, 35, cheaper models 30. Okay. And then there's some semi. I think semi ramp will be slower than people think, but we'll see. I think that 4680 production in Nevada need to ramp before semi can come to volume production in Nevada. And we haven't seen any evidence of that, so that's going to be a while. If you joined us on X just now, I highly recommend watching on YouTube because we're going through James Katz's forecast, and you can see the forecast on the screen on YouTube. Bear case scenario. The main differences in the other bear case versus base case are as follows: slightly higher 3Y volume case, but they require an additional 5% price cut to achieve it. Okay, lower cheaper model sales as Tesla's late in bringing these market. Okay, lower CT sales as slightly lower ASP. Okay. So he's expecting some sort of price cut as Cybertruck production ramps. Fine. Given the above mentioned scenarios on the revenue side, this yields an ASP decline of 8%. Okay. I mean, we kind of talked through this a little bit. I think the aggressive part on the bear case is 1.8 million unit assumption. The 10% growth. Let me just see. Hold on a second. For the bear case growth rate, he said 1.98 million from 1.8. So that's like a 10% growth. And I think that's too aggressive for a bear case. Like if there's a recession, I think it's reasonable that it's possible it's going to be 0% or even lower negative growth. Now, kind of, next, I mean, we talked about bear case, and I think the Uber bull case is more, but let's see. Bull case, slightly higher, cheaper models. Sales of 500,000 versus 400,000. Less cannibalization of Model Y, so higher Model Y volume sales. This model assumes 50% of Model Ys, and all cheaper models made in Austin include Tesla's made-in-house 4680 battery packs, which unlocks additional value in the form of IRA battery manufacturing credits, which directly reduce the cost of Tesla to build these vehicles by $3,600. Okay. Given the above mentioned scenarios on the revenue side, this yields an ASP decline of 6.3%. Okay, auto margin 18.4. Okay, so he summarized the ASPs and cost to produce by base, bear, bull. You can see it on YouTube on your screens. And Q4 was 34,544. A further 8% decline, I think, is very aggressive, especially if Cybertruck production ramps as he's expecting. So I think the cost per vehicle on the bull case is too low. And but we can dig into these numbers more as we build out the DCF for Tesla Live. Full stop driving is really what I'm interested in here. I think this is the upside scenario for 2025. Full FSD take rate increasing is a potential upside scenario for Tesla, I think, 2025. So let's see what he has to say on that. In this analysis, Tesla generates FSD revenue from two sources: sale of new vehicles and two recognition of deferred revenue. Since volume, I think this part, deferred revenue, people focus on too much. I think they don't focus on enough on millions of cars out there not having bought or subscribed to FSD, potentially subscribing or buying FSD. That's not deferred revenue. But since volume and the base bear bull scenarios are different, the FSD component of each scenario will also differ. Higher volume at the same conversion rate equals higher FSD revenue. The other things to consider are FSD conversion rate and FSD price. The bull case assumes a slightly higher FSD conversion rate than the base and bear cases at 10% versus 8%. Wow. That's actually very low, I think. I think FSD conversion rates will increase quite a bit, way above 10%. But each of these scenarios assumes that FSD is basically where it is today, supervised FSD with marginal improvements in performance every few weeks. I think that's safe assumption. The standout here is Uber bull case, which I will explain in the assumptions. Tesla launches unsupervised FSD on July 1, 2025. So let's do a poll on YouTube. Okay. And let's see what people expect in terms of when will Tesla launch FSD unsupervised is the poll. Okay, and the options are Q3 2024, Q3 2025, at least, let's say at least in two states. Okay, I'll say it in unsupervised in at least two states, or three, because so we have California, Texas, and California, Texas is kind of what Elon mentioned. I think a third could be maybe Arizona, since both Cruise and Waymo operate in Phoenix. So we're going to do first option 2025, second option 2026. Actually, we have bull audience right now. So let's do Q3 2025, Q4 2025, 2026, or 2027 or later. Okay, yeah, I think these are fair. Let's do H1 2025. So first half 2025, H2 2025, 2026, and then 27 or later. Okay, there's your poll. When will Tesla launch FSD unsupervised in at least 3 states? Start poll. You can vote in the poll on YouTube through the link at the top of our screens. Okay, great. So let's continue with, yeah, thank you very much, everybody, for liking, reposting this space, bringing people. I mean, we don't usually do weekend spaces, so I rely on you guys to kind of get the word out, and on YouTube as well. We're going through James Katz's forecast for 2025. So this is his Uber bull case around FSD unsupervised. Okay, that's the kind of underlying part of his bull case. Tesla launches unsupervised FSD on July 1, 2025. FSD conversion rate increases from 10% in the first half of 2025 to 30% in the second half of 2025. FSD price increases from $8,000 to $16,000. Yeah, okay. Since unsupervised FSD is launched, Tesla recognizes considerably more deferred revenue. Like honestly, I don't even know the deferred revenue balance at this point. On I don't think it's as high as people think on the balance sheet. I think, like I said, it's more about off balance sheet opportunity. Okay. Yeah, he's got $2.8 billion deferred revenue recognition. That's ridiculous. That's not even possible mathematically. I don't think he understands accounting too much. Risks. While I did try and make conservative assumptions throughout, I would be remiss not to mention any risk associated with the model. Here are some things that could impact my base case assumptions. IRA, $7,500 point eliminated under the Trump administration. I mean, he did say that's going to happen at this point. This would require Tesla to lower prices to achieve the same level of sales, or it would reduce volume sales. Further fallout from Elon's role in politics. California is by far Tesla's U.S. biggest market, and any additional demand erosion in the state will be felt. Yeah, there was actually a video that's circling around both on X and on Instagram and TikTok. A video created how Elon got Trump elected, and it's about 7 minutes. And it kind of goes through the timeline of buying Twitter, what Elon has said before and throughout the last 2 years. And, I don't agree with the things that it says, but the fact is it's been seen now by tens of millions of people already in the first couple of days. And that's going to continue. So I think, especially if Elon continues to kind of take these calls with the Ukraine president and kind of gets integrated at a higher level to Trump administration, I think the pushback will continue beyond what I thought originally. But if he becomes more of an advisor and he has other people kind of in the cabinet, maybe that changes. I don't know, but I think this risk has a high probability of materializing. The second risk that he's talking about. Further fallout from Elon's role in politics. California is by far Tesla's biggest market, and any additional demand erosion in the state will be felt. Delays in introducing the cheaper models. A rebound in inflation. Particularly, I don't see a rebound in inflation at this point. Yeah, especially with rates staying high. The long end of the yield curve is going higher. I don't see how we get a rebound in inflation. Especially with the productivity increasing too. So, particularly costs of commodities or labor. This would make it more difficult for Tesla to achieve my cost reduction targets. Okay. 8, summary. 2025 is shaping up to a very strong year, which should see volume growth accelerate, margins stabilize, and operating leverage expand. Given these 4 scenarios presented, I expect Tesla to generate $4 per share in earnings in 2025 with revenues of $120 billion. So the current price is about 321. So 320 divided by 4 is next year's forecast is we're looking at about a 77, 78x forward PE ratio, according to Cat's base case EPS assumption. Any questions, comments? Please request to speak. I'll see if I can bring some people up to ask some questions, share their comments, share their takes about this. We're also going to do a similar, more detailed DCF model for Tesla Live on YouTube, and also not just for 1 year, but multiple years out. So I highly recommend being part of that process. Join the YouTube channel, subscribe. It's free to do. It takes only 2 seconds and it helps us grow. And we're going to focus more on that. And hit the like button. Share this video with others. We're going to do more watch parties as well. So let's see the chat comments here. Nita says, has to be at least before the end of the first half of 25. Is Tesla says they will have the robotaxi in the first half of 2025. Yeah, and Tesla has said many times So why this time is different, Needy? Actually, let's look at the poll results here. 48% of people on YouTube said Tesla will launch FSD unsupervised in at least 3 states in the second half of 2025. 48% of people said, 31% of people said 2026. And only 3% of the votes, one person said 2027 or later. So, okay. Alexander.
Yeah, I've been looking at the tax rate here. Wasn't Trump supposed to lower the tax rate for companies?
First of all, you're demoted. You're demoted to asking questions. And questions should be 10 words or fewer and start with a question word.
It was a question.
Yeah, start with a question word.
It was a question.
All right. Will Trump eliminate taxes, tax incentives? Yeah, I think he said many times that he will eliminate the $7,500 tax credit. And I think this will happen, and I think it will happen very quickly. And the debate really is, I think some people are thinking that maybe he won't eliminate the production tax credits. So the $45 per kilowatt hour that Tesla gets for producing 4680s. But I've heard from other places that that's also on the table. So I think it's TBD. And I think some Tesla Elon fans are maybe thinking that Elon, if Trump eliminates that, maybe Elon can also maybe persuade the Trump administration that fossil fuel subsidies should also be eliminated. And so that would actually be huge for Tesla if that happens. But we'll see. Alexander?
Wasn't Trump supposed to lower corporate tax?
Yeah. I think they will try, but I would say most of the promises he made, most of the promises that Trump and Kamala Harris made, just not feasible given the current financial situation of the country. I think, like, the fact is, the Biden administration ran a really massive budget deficit over recent years, and as a percentage of GDP, it's at a level where you only see it in recessionary levels. Like, you have fiscal policy, you have monetary policy, and monetary policy in the last few years was pushing the brakes, but the fiscal policy was pushing the accelerated pedal at the same time. But the fiscal policy has been so expansionary that you only see it in like war times or recession times. But what happens? This is Jeff Gundlach's kind of thing too, theory. What happens if we actually go into a recession next year? And Peter Thiel also said that he expected a recession in the near future. Elon says that there won't be a recession, so I guess we'll see who's right. But I think that there will be. And in that case, the monetary policy will switch to expansionary, but what happens to fiscal, we don't know. But in the near term, when there is no recession expectation right now, and markets are rising, the credit spreads are low, but the budget deficit is very high. And now you have a administration that wants to expand even further with tax cuts, like you mentioned. But if yields surge because of that, so if the prospect of government increasing its budget deficit further leads to bond market participants asking for higher yields to finance this government deficit through the treasury market, then higher yields is like gravity on all asset prices. That could impact stock prices. That will obviously impact bond prices through the inverse relation of interest rates and bond prices. But it would also impact things like real estate prices and also corporate debt financing, which there you have your treasury yields and a spread on top of that, which leads to the kind of the financing that corporations need when they're issuing debt. So basically, if the world starts losing confidence in U.S. government financing this huge deficit, we can see there is a potential risk out there that I don't think people appreciate yet, that interest rates surge at a very rapid pace. Like you might think it would progress something like this. There will be a failed auction issuing these treasury bills and bonds. Bills just mean less than 1 year term. Treasury bond just means more than 1 year term. So when treasury's financing, issuing these treasury bills and bonds, is financing this government debt. If the market all of a sudden wakes up one day and says, you know what, this is too much risk, we're going to require higher yields, and that leads to some sort of panic, you can see what we saw last year in United Kingdom, where yields surged on their 50 basis points, 1.5% overnight. That's a black swan event that I don't think people appreciate just yet. And Jeffrey Gundlach talks about often. And I think he has a really good point. So that's something to keep in mind. Steven Yamada says, 100% agree. Gook says, the world has already lost confidence in the US, LOL. This is not correct. Like Gook, but Ponzi on YouTube Live Chat says, the world has already lost confidence in the US. This is not correct. The US dollar is still the reserve currency. The credit rating of the US government is still very high, even though it's not AAA. And when you see, flight to safety kind of trades, you see, emerging market investors rush into US dollar. So I don't think people in US appreciate the role US plays on many fronts, whether it's kind of the financial capital markets or military leadership or free speech. Like, I don't know where Gook Waponzi lives, but US is still seen as the gold standard, especially in recent years, where every other economy, like China, went into a really major economic slowdown, where they had to pump all this money, like do some unprecedented actions, and they still can't get their economy growing at a speed that it used to. And this is happening when US has been putting up a very record GDP growth rates, high GDP growth that no one expected in recent years. So I think the idea that the world has already lost confidence in the US is kind of crazy. Just not backed with facts. Brandon LaBianca says oil subsidy is not going anywhere. Unfortunately, may be weakened, but impossible. But some Trump donors are fossil fuel guys. Okay. Farrah92 asks, what type of fossil fuel incentives are there in the US? Like, for example, I mean, you have accelerated depreciation of equipment used in the field is one big one, I think. There's some tax incentives, I believe. And then just the fact that you're not pricing in the impact on our ecosystem is also a huge incentive too. Anyway, Alexander, any other follow-up questions? Alexander, by the way, like people like Nita says, watching on YouTube, seeing Yaman's reaction is just laughing, laughing coupled with sarcasm. Good to see you laughing to go with the sarcasm. Yeah. So anyway.
When do I get the promotion again?
you have to you can earn it back and ask some good questions that lead to deeper discussions. And don't worry about who's in DM groups and who's not. Just focus on getting the facts and the increasing quality of the content.
I will go down and buy hummus right away.
Okay. Quiet.
Why is no one asking like you guys are asking today about or talking about the robo-taxis, every Tesla being one next year?
Do you think that's going to happen?
Well, that's what Elon said, didn't he?
Why? But that's not what I asked you. I didn't ask you what Elon said. I asked you, do you think that will happen?
Oh, that's what you're asking. Yes. If Trump fast tracks it.
Hold on. We just got a condition there, followed by a condition. So you think it's going to happen or not? It's a yes or no question. I'm not looking for any conditional statements like if this happens then that happens.
I guess I'm with you on what you were saying on the certain cities, I guess. Yes. So I will say yes, those cities.
We got another conditional statement in those cities. Okay, which cities are those? Let's nail it down to a coffee. Do we have a coffee bet with you?
Let's do it. San Francisco, Austin, and Phoenix.
Okay. So you're thinking that the existing Tesla fleet will turn into robotaxis in San Francisco, Austin, and Phoenix next year.
Yes, you got to bet, but you got to come to Hawaii to get a coffee.
Okay. I will. How about we do this one city to increase your chances a little bit? Okay. Because by the way, Elon says there will be FSD unsupervised. He doesn't say robotaxis, right?
I thought he said robo-taxis with the app.
Yeah, I don't think so. I don't think so. I think there will be a period where you have FSD unsupervised before robotaxis. Robotaxis meaning like nobody in the driver's seat. I don't know. I mean, there could be a federal. I think the one thing that changed in the last week is that the chances of a federal approval, like an approval at the federal state, is higher now. That would kind of like Waymo is going through a lot of friction trying to get this approved city by city, state by state. So that might change a little bit, I guess. But I don't think that, like, I agree with Luce when he talked a couple episodes ago that I think the technology is a limiting factor here, and specifically the inference compute on the cars and also the training compute. So a few months ago, maybe a year ago, we talked here. What would you change? Pick one factor that you would change to accelerate timeline to robotaxis, driverless, Tesla, vision-only rides. And I think we kind of settled on was inference compute. So I don't think hardware 3 will be enough anytime soon, and I don't think hardware 4 will be enough anytime soon either for the reliability level that you need, which is 99.9999% reliability.
I guess two factors is what I'm thinking about would be, of course, they're already doing a driverless car in parking lots summoning. And then they're also having Tesla's employees cruising around with employees in San Francisco, which sounds very successful.
Yeah, we don't have any evidence of that, do we?
Well, they said that for a year, Elon leaked that employees have been driving Tesla vehicles with other employees, Uber style.
But those are not driverless rides.
Oh, I see what you're saying, but maybe they know that maybe they are doing it pretty much almost driverlessly, but they have somebody sitting in the seat.
Yeah, like Omar is doing, right? Maybe he was just talking about Omar.
Yeah, it could be.
Yeah. Yeah, I think like True to a T, who's a great supporter of the space, says, I think NYC, and I'll post on here on the screen. He thinks NYC will be FSD sooner than we think. It's a simple grid system of streets, and they're about to add a big congestion tax on commuter cars. Trump has deep ties there politically, period. Again, I don't think the limited factor is politics or regulation. And Elon has said that before too, actually, that he doesn't think regulation will be a limiting factor here, or will delimit a factor. And I think there's a big difference. I think there's several years between doing these rides one time that we see on camera, like no intervention, one time, or even a few days, you don't get an intervention, versus a level that I think is needed for robotaxi service to be commercial, which I think is going to be no intervention, even over a year or several years, you know? And I think that's going to be like 5 years in between those two. So, Alexander, what do you think?
I can only ask questions.
Yeah, you just say it in question form. All right. Any other questions, comments? If Habib wants to come up and talk, he came up early, but he couldn't, I guess. We just went through James Katz's forecast for 2025, so you can watch on YouTube, even during the live stream. And we're going to build our own DCF over time for Tesla Live. Bull 2035. Are you in the space or not, Bull? If you're in the space, he keeps replying, but I can't see him here. Come up to speaker board. Let's talk about it. So he replied with a link to the hill. Let me see if I can pull this up on YouTube and read it together. Thank you, Jeffrey Jones, for a $2 super chat. He says, I love the no-nonsense snark on this channel. Thank you. All right. Let me see if I can pull this up. All right, I'm going to read this article real quick. Let's see what Bull says. More than a dozen Republicans wrote to Speaker Mike Johnson on Tuesday. Let's see what the date here is. August 7th. Okay, so this is an August article. On Tuesday, asking him not to axe clean energy tax credits in the Inflation Reduction Act if the GOP maintains or expands its House majority next year. In the letter, first shared with Politico's E&E News, members led by Representative Andrew Garbarino, Republican from New York, criticized the IRA as a whole, but wrote that repealing the credits could undermine the growth in the energy sector spurred by its tax provisions. They noted that a number of companies have already broken ground on investments they made, assuming the credits would remain in place, and that eliminating them could lead to a worst-case scenario in which billions of dollars have already been spent for financial benefits that no longer exist. In addition to Garbarino, the letter was signed by GOP representatives David from California, Oregon, New York, Indiana, New York, New York, New York, California, Virginia, Utah, Nebraska, New Jersey, Ohio, Iowa, Arizona, Nevada, and Georgia. Energy tax credits have spurred innovation, incentivized investment, and created good jobs in many parts of the country, including many districts represented by members of our conference, they wrote. We must reverse the policies which harm American families while protecting and refining those that are making our country more energy dependent and America is more energy secure. As Republicans, we support an all of the above approach to energy development and tax credits that incentivize domestic production, innovation, and delivery from all sources. Republicans in the chamber currently have a razor-thin margin, and any repeal vote would be doomed in the Senate. However, former President Trump has indicated he would support repeal of some or all of the law if returned to the White House, and Senate Majority Leader Chuck Schumer called the repeal no idle threats in June. The Hill has reached out to John's office for comments. Okay, thank you, Bull. We'll keep that in mind. Okay. Any other questions, comments? Garrick?
Yeah, hi. Can you hear me?
Yes.
Hey, thank you for hosting this. Longtime Tesla owner and Tesla investor. I had a quick question. Currently, most of the revenue comes from automotive sales. When do you think the next product, and what product do you think that will be, that will take over automotive, revenue? What's the next product that will have the most revenue, Tesla revenue, and when do you think that'll be?
I think Tesla Energy.
When?
I mean, hold on one second. So this is several years out in any case. Is it going to be Tesla Energy? I'm not sure. I mean, it might wait out to Optimus. So we'll see.
Yeah, I don't know why my gut says Optimus, and I don't know, maybe 2027 or 28 sounds crazy, but it just feels like less regulation, maybe easier to manufacture, and way more potential customers.
Yeah. I mean, it would have to be a product that's going to reach $100 billion annualized revenue. And let's say,
I'm thinking like the commercial use is not the retail for Optimus.
yeah, I mean, you have to get to a millions per year production level for Optimus.
It's going to take more than a year or two to ramp up.
Yeah, and that's not going to happen until 2030 plus.
Wow. Okay. So maybe battery, because they're already, they're maybe already ramped up on batteries.
Yeah, let's say they get to 100 gigawatt hours and they're charging $250 for a kilowatt. Let's say you're still looking at 25 billion. So that would have to be hundreds of gigawatt hours of production. And that's not going to happen for several years either.
Wow.
Yeah, I don't think automotive will be passed anytime soon.
Wow. Okay, thank you.
In terms of revenues, though, profits, I don't know. Especially if you bulk in FSD revenues under automotive, which I think Tesla will do. So.
Yeah, I don't know why I was thinking that the rideshare would be like a separate, what do they call, mobility as a service, but I guess it's all ground transportation.
Yeah. When do you think Tesla will get to volume, like a widespread adoption of Tesla robotaxis?
So they're testing early 2026. Then Cybercab production begins end of 2026. This is all what Elon says. I don't know, right? When do I think? I agree with Elon. Whatever he says, that's what I'm. Yeah. And it should take at least a year, right, to ramp up Cybercab.
Yeah. Yeah, I don't think technology will be ready by 2026 for robotaxis.
Like the full self-driving, you mean?
Yeah, I don't think the reliability necessary for robotaxi level service is going to be ready by 2026. Alexander?
The annual revenue for Uber was 37 billion for 2023.
Right.
And they're pretty much worldwide, right?
Yeah.
Yes.
Yeah, we should do just like we did a Rivian earnings call watch party. We should do one for Uber as well. So maybe we'll do that sometime soon. We should have a list of companies that we track for competitive purposes and increase our understanding of Tesla. I thought the Rivian earnings call watch party was very useful. We took away like 5 to 10 items. We discussed over 2 hours, went through the financial statements and then the earnings call together. That's on YouTube channel. You can reach that through the link at the top of your screens. Okay. Garrick?
Yeah, last one. So, have you ever looked at the ARK Invest? That could be kind of fun because Elon always references it. It'd be kind of fun to kind of go through the ARK Invest statement and kind of see what the Tesla potential is. In the long term, because I feel like there's so many different industries they're going to be able to hit, from ground transportation to energy production, storage, distribution, the mobility as a service, right, Optimus. Yeah. So I don't know if the ARK Invest covers that, but that would be kind of cool to go through one day, like through a space or something.
Yeah, we can go through Uber call and then we can go through ARK Invest forecast as well. So I'll make a list of things and we can schedule these out. We can have maybe like a Google spreadsheet of schedules of watch parties or something, and then go through all of these things one by one. And you can support this effort by subscribing to the YouTube channel. And the faster we grow, the more I can ramp these additional content. All right. Any other questions, comments, Alexander?
No.
Okay. Kwai?
No, I'm good right now.
Okay,
Everybody
great.
can look at today's sunrise I just posted, because it's so early here, Yaman.
I was just about to say I haven't seen.
Just posted today's amazing sunrise on my site in Kauai. Just coming up right now. It is 6:51 in the Aloha State.
I pinned it. Here you go. I'm showing it right now on YouTube.
You are too nice, my friend. Someday I'll do a live video for you guys.
Thank you. That is a beautiful picture. Look at these, man. Look at these trees and the sunrise. Aloha.
You're right, Yaman. A lot of people don't realize. That people call these palm trees a lot over here? Do you know you would be offending Hawaiians? They're coconut trees.
That's why I didn't say palm trees.
You're right. You got it down, man.
Coconut trees. All right, Jeffrey Jones, thank you very much for the $10 super chat. Jeffrey Jones asks, can someone on the call please provide some context on current Tesla short interest and how it changed from a week ago? Well, the short interest data is delayed by 2 weeks usually. And the short interest Tesla is not as high as it used to be in 2018, 2019. It was about 30% of the shares outstanding was short for various reasons. I think the concerns around Tesla's financial viability was much higher. I don't think anyone was questioning whether Tesla will go bankrupt or not at this point. But we can look it up right now live. Thank you for the super chat. On the NASDAQ website, Tesla's short interest is 79 million shares as of October 15. October 15 is the latest data available. So again, it's very much delayed reporting here. That was up from 74 million or from September 30th and 77 million before that. So it's actually coming down. Like in June, July, the short interest was 100 million shares. But today it's more around 79 million shares. And that could simply be because of maybe some funds are trying to limit their absolute level exposure. So as the share price is increasing, maybe they're reducing their share count on the short interest. Or it could be because of some hedging strategies being employed by market makers. That could be it too. But if you look at the kind of percentage of outstanding shares, it's a very small number compared to previous years. and the days to cover is only 1. And during a short squeeze, sometimes you see this volume surge, so that days to cover will be actually lower than 1. So I don't think short interest is a huge topic of interest. Like short interest as a float is about 2.8% as of the most recent date available for this data. So very small. That's 10 times lower than in previous years, like 2018, 2019. I don't know what happened in recent weeks. We don't have the data for that just yet. Arthur Blake?
I was surprised to hear you say you don't think they'll have fully unsupervised FSD by end of year 2026. I think for sure they'll have it technology-wise, just from driving it all the time. I have a hardware 3 Model Y, and it is really close already. I just ordered a hardware 4 car, so I could try that out as well. And that's over a year from now, December 31st, 2026. I think for sure we'll see it.
Okay, I think the discussion was around robotaxis, so driverless, right?
Well, that's all they need to make it happen, right? That and any regulatory issues. And there's some places where, like Florida, they could already there's no regulatory hurdles whatsoever. So I think for sure we'll see a pilot program in 1 or more cities by then.
In 2026?
Yeah.
Okay. And how many vehicles do you think would be part of this pilot program?
I think at least 100.
Okay.
And I'd be happy to make a coffee bet on that.
Well, the thing is, though, like, I think that can be possible. Like, for example, they did it in the studio, and they did it with a couple dozen vehicles.
Exactly.
But the thing is, they did it in a way that took months to kind of, collect much more data from that specific region. It's basically a block, and use some training time to optimize it for that area, and the limited speed to like 5 miles an hour. So
Yeah, but we're talking 2 years from now.
yeah, I understand, and that's what I'm trying to say is that I think going from a limited area of 1 block to limited speed of 5 miles an hour to a commercial service, I believe it's going to take at least 5 years.
I don't think so, because I think they already have the underpinnings of it pretty much working. Elon said on the earnings call that they already have employees that are only in the driver's seat just to watch things, but the things are driving employees around unsupervised. That means the app is working. I think he said they're even using the full stack, the app, everything. So I think it's going to happen really quickly. Really slow at first, and then all of a sudden, oh my God, it's here. And I think it's going to happen before end of year 2026. But we'll see.
For a coffee bet, would you be willing to do 1,000 Teslas?
Sure.
Yeah?
Yeah.
Okay. So the coffee bet between you and I now is 1,000 Teslas, and I'll type this out after the space is over in a few minutes. 1,000 Teslas in multiple cities by the end of 2020. I mean, actually, I don't really care how many cities they do it in. Even if it's just 1 city, you win. So 1,000 driverless commercial robotaxi, like paid rides. 1,000 Teslas giving paid rides.
Can we include Model 3s and Model Ys, or you just mean Cybercab?
Whatever you want.
Okay. Yeah, I think for sure we'll see it. Now I'm super bullish. I could be wrong, but
Did you say by end of 2025 or 2026?
26.
Okay. Okay, fine.
That's more than 2 years from now.
Yeah.
And it may even happen a year earlier than that. We may be super surprised. Do you drive FSD yourself?
I mean, I don't have a Tesla, but I go on
Well,
test drives. I drive friends' cars and test FSD.
Okay. I mean, I use it daily. And I used it last night to drive home 30 miles from the airport. Pretty decent traffic. I didn't have to touch the wheel. And I was a little bit tired, so I was happy that I had that to back me up because it just made the drive a breeze. And I'm so excited about it.
Yeah. Yeah, I mean, the last time I drove FST was about a week ago, and actually just a few days ago. I tried on Cybertruck, and before that, a couple of weeks before that, I drove V12 as well, and no nag on the steering wheel, and it does great, no question about it. It advanced a lot. It's just the problem is, I think the reliability needed for road access service of 99.9999% is a very high bar. And right now we're at 1.9, not even 2 nines.
Yeah. Well, I think in a few months we'll start seeing. I think FSD 13 is already out, and there's probably some choice people using it, like in very limited release. Once that goes a bit wider, we may see another 9 or 2 pop on the board.
Okay, Garrick.
Yeah, sorry, I don't want to change the subject, but I asked Grok my question. Grok says, robotaxi powered by full self-driving, early mid 2030s. That's like what product and when will overtake automotive sales? So I thought that was
Okay, great.
I think that was similar to what thing.
All right, I got to wrap this up in 2 minutes. Let's get a quick question from Bogdan. Bogdan?
Yes, hi Yaman. Hi everybody. I have a prediction to make. I don't know if I can.
Do it right now.
So my prediction is that Tesla intensives or electric car intensives will end up as soon Tesla will launch first robotaxi in city, probably California. The reason I'm saying it because the people paying, I mean, the tax incentives going from our pocket right now, the taxpayers, and as soon we have robotaxi, that we don't really require having a car, and Tesla gonna make that money on driving mileage. So would that make sense?
All right, we can talk about this on Tesla Live. I got to wrap this up. Thank you very much, everybody. Arthur, I'm going to type our coffee bets. Glad we have a coffee, but we need more coffee bets in Tesla Live.
Sounds good.
And Arthur, start saving for my coffee. Thank you very much. And
Will
I'll
do.
chat with you all next time.